right. There we go. I think we got things fired up here. Good morning. Good morning. Good morning. My name is Daniel. I'm with VantagePoint AI, and we are going to get our live fired up and rolling this morning. Do a quick check, make sure that my microphone is working as planned. It looks like my camera is working as planned. If you could, if you're in the room already and you're listening to this live, welcome to VantagePoint AI. And we're going to be talking about answering the question, can AI predict the stock market? It seems like a valid question with so much chatter around artificial intelligence. So we're going to get our session going here. Looks like sound is working great, so that's good. If you're here, good morning. Hop into the chat. Let me know you're here and you're ready to go, and this way we can get things headed off in the right direction. If you haven't attended a VantagePoint AI Live with us before, let me say welcome. Let me know that this is your first time as well in the chat box, and this way I can recognize you. Hey, Ashton and Scott, good morning. Good morning, glad you're here. We're going to take some time today and just do some live market analysis with the software that I use, VantagePoint software, that does deploy artificial intelligence, which we can get into here in a second. But I thought it'd be a good idea today to just take a moment and walk through whether or not artificial intelligence can give you an advantage in the markets. And I thought the best way to do it is just do some simple market analysis with the software. That's really what we're going to dig into. We'll look at we'll look at the overall stock market, the S&P 500, the Dow, the NASDAQ, if you'd like. We'll look at some individual stocks. We can take a look at some futures markets. I see we've got a request in the chat already, Isma, for gold. So happy to pull up the gold forecast and take a look at that with everybody. Oil, the dollar. We have the flexibility and the time here today to do whatever you'd like to do to get some really good market analysis done. It's important to understand as well, this live session is something that we do every couple of weeks. If you haven't subscribed to the VantagePoint AI channel, here is your reminder. Click on that button, subscribe, and you'll be notified anytime we put up a session like this so that you can come and join and be part of the live market analysis. Hey, Milton, good morning. Hey, Phoenix, glad you're here. Nice to have you. Nice to have you be part of today's live session. Lance, my friend, Steve. All right, good. So we've got a lot of people joining in the session now. I'm going to dive right in. I figure no time to waste. Looks like everything is working as designed. Let me just bring up the VantagePoint software. All right, here we go. I've got the VantagePoint software up on the screen, and for those of you that don't know, this is where all of my analysis starts. It's available if somebody wants to take advantage of it and utilize it for your own personal trading. But today, all I want to do is dig through the details and dig through the analysis and explain what we're seeing in the markets and what the artificial intelligence is forecasted and is forecasting. And then this way, everybody's got a good assessment, depending on what market we look at, on what the AI is saying. And don't forget, that question of can AI predict the stock market, that's a big question. That's a big question to answer. And I'm gonna do everything I can to help you answer it today as we do some live analysis here. Right now on the screen, I've got the S&P 500 up on the screen. You can see I've got the dates. I got about a 3-month date range in here, and we're looking at a predicted moving average on the screen. Now, if anybody here uses moving averages, the interpretation of what I'm going to do is going to be the same. However, the indicator is very, very different. So what we're looking at are two moving averages. There's a blue one and there's a gray one on the screen. The blue predicted moving average is a proprietary indicator generated by the artificial intelligence. You've heard a lot. I think AI has pretty much become a buzzword, and a lot of companies are using generative AI. A lot of companies are using different terms to help you understand what it is that the artificial intelligence is doing. We covered it in a previous video, what generative AI is. But what it basically boils down to is artificial intelligence that is deep machine learning, can generate information like text, pictures. There's large language models that can write letters and books and so many different things. But what the AI is doing is it's using neural networks, it's using artificial intelligence processes, and it's generating something. And in this case, what we're looking at is the AI is generating a predicted moving average. I'm going to get a little pen here just so I can point. Here we go. This gray line that we're looking at, that's a simple moving average. So what I'm going to do to interpret this today, and just so that everybody understands, I'm not here to provide you trading advice. This is education and education only. But what we're doing is we're going to do some live analysis using a predicted moving average compared to a simple moving average. The simple moving average, a lot of people know them as an SMA. You are probably using a 200-day, a 50-day, a 20-day simple moving average. And the way a simple moving average is calculated is it takes, if this is today, I'm just going to make a line for today right here. And if you're doing a 10-day simple moving average, it adds up 10 historical days. What is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Count those as days. Typical price, which is high, low, close. It's adding up those 10 days, and then it's going to divide that sum by 10. And that's going to give you an average, right? It's going to give you an average of that price of those 10 days. That's how a simple moving average is calculated. Well, if you're doing a 10-day simple, it's 10 days. If you're doing a 20-day, if you're doing a 50-day, if you're doing a 200-day, that is a very long, slow moving average, by the way, a 200-day. But if you are using it, it's adding up 200 days, dividing by 200, plotting it on the chart. Now, there are exponential moving averages where it'll add some value to the more recent days. It'll add some weight so that it puts more weight on the more recent days, hopefully speeding up that moving average. And that's how a moving average is calculated, a simple moving average or an exponential moving average. And that, my friends, is the technical analysis that so many traders that use charts, look at charts, or even if you look at a screen on CNN or something like that that has a moving average on it, that's how it's calculated, just to kind of break it down. Now, this blue line up here, let me, I'm going to do something fancy. I'm going to get a little different color marker. There we go. This blue line up here, this is VantagePoint's proprietary predicted moving average. And let me just explain the difference between that and a simple moving average, all right? If this is today, this blue line does, let's say it's a 10-day simple moving average, it's going to take 7 days, 1, 2, 3, 4, 5, 6, 7. It's going to take 7 historical days, right? And it's going to add that, it's going to make that part of the moving average. But remember, we're still talking about a 10-day predicted moving average. So there are 3 days there, not yet included in this line. And the question that people always have is, where does those 3 days come from? How is this line predictive? Because it's not drawing out in the future. How is it predictive? Well, what the artificial intelligence within the VantagePoint software is doing, it's actually using deep machine learning, neural networks to generate predicted typical price. So it's predicting the price of the next 3 days in the future. I know, right? This is, by the way, remarkable. It is a patented process that we utilize here at VantagePoint. These 3 days, I'm going to put a little P under these days just so that it's clear. These 3 days are actually predictive. Where what it's doing, it adds up all 10 of these days with seven of them being historical, 3 of them being predictive, and then it can add by 10 and do the same thing and give you the average. But the difference here is that there's actually numbers in the formula that are unknown to anybody else in the world except for the artificial intelligence. Once they're generated, then our technical analysis, very powerful technical analysis in VantagePoint, grabs those figures and creates this calculation, which then turns this predicted moving average into something that is a leading market indicator. When I say a leading market indicator, it has the ability to predict the trend change up to 3 days in advance. Now, this takes us down the path of the question is, can it predict the markets? We're going to take some time and look at that. But the other question I get is, why only 3 days? Why not a month? Why not 21 days, right? And I always, I chuckle at that question because, I'm a boater. I love going out on the boat. And if I tried to get a 30-day forecast on whether or not I'm going to have a good boat day, and remember, for a 30-day forecast, I got to analyze a lot for a boat. Wind speed, water temperature, right? How rough are the seas going to be? Is it going to rain? There's so many factors that go into deciding, is this a good boat day? Well, doing that for 30 days out might provide me a little bit of value, but it's not going to be very good as I get closer. That weather's going to change. I might get an idea if it's hurricane season, but that's not going to give me any real actionable data on when it's time for me to take the boat out at 6 o'clock that morning 30 days from now. And I like to use this analogy because trying to get a forecast of the markets 30 days out with artificial intelligence, so much can change in 30 days. The question you have to ask yourself is that a real forecast or is that coincidence? Now, just like the weather, and by the way, the weather does use neural networks and artificial intelligence to try to figure out weather patterns. But as that date comes closer to go boating, 20 days out is probably a little bit more accurate. But where it really starts to matter is in that 7-day window. Now I'm getting a better picture of the weather. And 3 days out, I can make a decision 3 days out with a high degree of accuracy whether or not it's a good boat day. So I like to just kind of walk through that a little bit so that everybody understands that there is a simple moving average here on the chart. And there is a predicted moving average here on the chart. And this predicted moving average has the ability to forecast trends in advance with accuracy up to 87.4%. All right. If you don't forget the 87.4%, let's say you can get an average accuracy of 80%. If you could be correct around the direction that a market is expected to move 3 days in advance with accuracy that high, even 80%, what is that? 80 out of 100 days you would be right. Do me a favor, hop over to the chat. If you could, and maybe you could help me answer this question. If you could forecast that high degree of accuracy, call it 80%, be correct 80 out of 100 days on the direction that a market is expected to go, an individual stock, gold, whatever the case is, would that mean you can forecast the markets accurately with AI? Go to the chat really quick and let me know your thoughts on that. I'm always interested in kind of getting feedback and understanding if that level of accuracy, because to me, I've been utilizing the software for a decade, if not more, maybe 12 years now. Been in the financial markets for over 2 decades, 25 years. And I would say, yes, if you can do that, then you can forecast the markets with artificial intelligence, especially if you're talking about 1, 2, and 3 days in the future like I just did. So hop over to the chat, give me a little feedback there and let me know if that's the case for you, because now I'm going to dive in and we're going to analyze that line, or we're going to utilize that line to help us understand where the S&P is expected to go. And with the S&P doing what it did today, I mean, I need to check the markets, but with the S&P down 50 handles, so 51 points today. The question you probably have that I'm going to try to answer is, did the artificial intelligence see that, forecast that the trend was expected to be lower? So let's dive back in. So now we're looking at the forecast here, and we're looking at the S&P 500. We're looking at 3 months of data, right? So if we look at this, this is the point, 518. If I go back to when the blue line was below or riding on top of that gray line, and I love it. Niranjan says that is better than a coin flip. Let's talk about that, right? If a coin flip is 50-50, and you could literally flip a coin enough times and get 50-50, right, on accuracy. And if you get 80%, that is, what is that, 30% better than a coin flip. But if a coin flip can already get you 50-50, and now you're getting 30% better than that, that's technically, what is that, 80% improvement? An 80% improvement over a coin toss, right? And there are some studies, matter of fact, there was a third-party study done on this analysis that I'm talking about here and found that not only is this artificial intelligence and can it forecast better than a coin flip, but it can also forecast better than standard technical indicators by an incredible amount of accuracy. So I like what you said there. That makes a whole lot of sense. And I can, what we'll do is we can drop a link to that third-party study. Very scientific, very mathematical, calculates standard deviations, calculates confidence intervals, but we can drop a link to that right in the chat if anybody is interested. Just let me know in the chat box if you'd like to see that study, because it was done over a year's worth of market data. All right, so let's dive back in. Let me get my pen. Let's get a nice pink color. Here we go. All right, so over here, 518, back here, we saw the blue line that was below the gray line here and cross above it. That's when the artificial intelligence, and you could see there was a little bit of red in between the lines and then it turned green. That's the moment where that predicted moving average crossed from below to above that gray line. So the predicted moving average had a higher value than the simple moving average. That predicted moving average, going from having a lower value to having a higher value, indicates that there is bullishness expected in this trend. That means basically the predicted moving average is indicating that if things stay the way they are expected to, that simple moving average could move up towards that where that predicted moving average currently is. Well, if that simple moving average, in order for that simple moving average that's only looking at past price data to get where that predicted moving average is, price has to increase in the next few days. And that's how powerful this prediction is, because that's the point right here where that's the artificial intelligence said, okay, I'm seeing something in the markets forecasting that this trend is expected to go higher. As long as that blue line stayed above and that shaded area stayed green, and this is just the software providing you a unemotional look at this. We know green means go or up and red means down. But as long as that shaded area stays green, and now what I'm looking at is a 3-day predicted moving average forecast, until it crosses below and turns red. That is, this is the entirety of this trend forecast from the artificial intelligence. This trend forecast is a long bullish forecast. Matter of fact, I can get you the number of days from crossover to crossover just to kind of give you a little outline of it. There you go. 52 trading days, a change of about 9%. This is a hypothetical gain. If you're a futures trader and you traded a full contract of the ES, that's a gain of about $18,000, $19,000. Again, hypothetical example here, but you can see that is how long that trend went. And it was forecasted with the artificial intelligence in the middle of May to start that trend, right? And that's one of the things that I want to make sure we're clear on, is that first things we've got to figure out is what really affects your trades and your trends. And in my opinion, there are two things: timing and direction. I've got to have the direction that the market is expected to move correct more often than not. I have to have an advantage, an edge when it comes to timing those moves so that I can not only manage my risk, because we know trading is hard, right? If we were just in trading to make money, it would be probably a lot easier. But you're in trading to make money consistently, which means you got to manage your risk. You got to have good money management. Capital preservation is key. And if your timing and your direction, if you're using, in this case, I'm using technical indicators that are forecasted, very powerful proprietary technical indicators generated from the AI to give me that edge. I don't care if it's 2%, 6%, 8%, 10% edge. Trading, for somebody to make money, somebody else has to lose money. So I need all the advantage I can get, right? And in this case, you can see what this artificial intelligence, when it said that that trend is expected to go up. Now there's a couple of moments here where there was a substantial drawdown. Notice that the blue line did not cross below that gray line. That predicted moving average never said that there was enough weakness in this trend for the trend to reverse and start going down over the next few days. It came close, it almost touched here. As long as it doesn't cross and turn red like over here, the AI is still saying trend is expected to move higher, right? Yes, Steve, I agree with you. Anticipation is power, right? Look, he says anticipation is power. Leaders anticipate, losers react. That's from Tony Robbins. I hadn't read that one before, Steve, but I like it. I like it a lot. Thank you for sharing it. Ashton has a question. Is it better to enter at the first crossover or wait till the first pullback to ensure the trend? Ashton, I love your question, because VantagePoint is, in this case, forecasting, and the answer is yes, it can forecast the stock market. It's forecasting that the trend is expected to reverse. It's not telling you what to do with your money or your trade, and that's what I love. It's not a bot. It's not a black box. There's so many, heck, a lot of marketing organizations and companies out there are slapping a sticker on a black box and saying, we got AI, it'll automatically trade for you. Well, I don't care what it is. Nobody cares more about your money than you, in my opinion, right? So what the artificial intelligence is saying here is that this trend is expected to start moving higher. That's where you get to apply that to your trade plan and say, you know what, my money management rules say I wait for the next pullback after that forecast. That's okay. That would be your trade plan. Everybody should have their own according to their risk tolerance, their money management guidelines. You know your trading, your finances better than anybody, and your emotions, right? Risk tolerance is about keeping your emotions in check, in my opinion. So In this case, somebody may take this trend and take a new position and expect that drawdown and then leg into that position. Somebody might just buy here and sell here very simply. You could do that. Somebody may take half of their risk and enter it here. And then on the pullback, take their other half of their risk and enter it there so that they manage their money. That part of the trade, that part of trading is really according to your trade plan. And that's what I love about this. And it looks like I answered your question. So thank you for that feedback, Ashton. And for those of you that just joined, we are answering the question of, can artificial intelligence forecast the stock market? And then we're doing some live analysis now as we go. All right, so let's go through this. The blue line is above, stayed above. The value of the blue line, when I say above, let me explain what I mean. The value of the blue line is higher than the value of the simple moving average. Right here on this day, if I'm looking at this day, this is saying over the next few days, this gray line, simple moving average, is expected to pull up to where this blue line is. Here's day 1, here's day 2, here's day 3, and look where the gray line is, almost exactly where that blue line was 3 days prior. So that answers the question of how is it predictive if it doesn't draw into the future. Remember, predictive is about price. This is saying 3 days in the future, the price of that gray line is expected to move up towards that point, increasing value of that asset. In this case, we're talking about the S&P 500. Even when we have a pullback like this, again, the value of this blue line, even though it's pointed down right here, is saying that gray line is still expected over the next few days to move higher. 1, 2, 3 days, almost got exactly where that blue line was, but you can see that pullback, bang, nailed it. The key here is understanding that the prediction is about the value of the asset. And a higher blue line, a higher value of the blue line indicates more bullishness until it changes direction here. Now let's talk about this recent forecast. This is the forecast that came out last week about the S&P 500. In case you were wondering, 8.8 is today. 8.8 is that predicted candle. This information updates at 6:30 p.m. Eastern time in the evening. So at 6:30 last night, let me write p.m. here. 6:30 last night, the blue line updated for today, and this little gray bar that has green ends on it, this is a predicted high and predicted low for the next trade day. This is 8.8. This is today, and I had this last night at 6:30 p.m. Eastern time. Well, what VantagePoint said last week is that there is enough weakness in this trend that this trend is expected to reverse, actually change direction and start going down. This would have been Monday, this would have been Friday, this would have been Thursday. So you're talking about Wednesday, Thursday last week, you got a trend reversal forecast on the S&P 500. Well, if you saw that going into the weekend, and let's say you were long some ES stocks, or maybe you were long the SPY, or whatever the case was, and you saw that going to the weekend, you got to ask yourself, if the AI is saying the weather over the next few days is going to be terrible, am I going to take the boat out? Nope. I'm not going to take the boat out if the weather is expected to change and be terrible over the next few days, be bad, not be excellent boating conditions. Again, I'm using that analogy just to say when that forecast happened, the market certainly lost value. Is it going to grab the top of every trend? No, nobody can, right? You try to get as close as you can. Is it going to be accurate 100% of the time? No, nothing is. And if anybody tells you something is, and they can't tell you how accurate they are, well, you got to ask yourself, is that really using AI? That's the other thing that comes up quite a bit. And let me just take a little aside here. I've seen a lot of companies saying new AI and this revolutionary AI product. They don't tell you how they're using AI. They don't tell you how accurate it is. They don't even tell you how long they've been using it. It's very, very vague. They're just slapping AI on stuff. What I'm talking about here is a technology that has been working in the financial markets for traders like you since 1991, right? That's over 3 decades with proven, documented history. Not only that, but there's patents proving this technology is unique and it works. So when we look at this, the blue line crosses below, indicating bearishness. The shaded area is red, Even with yesterday's strength, there was a bullish market on Monday. There was some strength in the market, but there wasn't enough to cause bullishness. Heck, it couldn't even break the previous day's high. But the artificial intelligence was not confused, was indicating the entire time that there was bearishness expected today. And for the S&P to lose 50 points and even go below that predicted candle, that is a very, very powerful forecast, right? Very powerful forecast. And I am using the 3-day predicted moving average on here. The great thing about VantagePoint is that there's a 2-day predicted moving average. There's a 1-day predicted moving average. Heck, if we look at the 2-day predicted moving average, it crossed lower, on Wednesday. You can see that happening. This is a more sensitive prediction because it's 2 days in the future. So it's closer to the current date, and you can see still a very powerful forecast. The 2-day prediction would have allowed you to take some profits middle of that trend. And Ashton, your question there is, can I use that to my advantage? Ashton is asking the question, which one is the best? Which predicted moving average is the best? Well, that depends on the market conditions and your trading style. If the market is very erratic, meaning it's not very trendy, then the 1-day prediction and the 2-day prediction, start to take hold and start to be the one that I look at more. If the markets are more trendy, then I'm using the 2 to 3-day prediction. Now, there's also the ability to use a certain one for your entry and a certain one for your exit. A lot of traders don't really need to be convinced to get out of a position, meaning there could be a little waffling in the market, right? And it's like, all right, that's enough for me. I'm out. I want to lock in my gains or protect my money. But then the other side of it, traders want to be really convinced it's worth putting their hard-earned capital in that position. Well, in that case, using a long-term predicted moving average that has more data in that calculation for the entry so that you can be really convinced is a valuable tool. And using a shorter-term one that is more sensitive to those market movements like the medium or the 2-day to lock in gains earlier is a strategy that can be applied. Again, this goes back to utilizing the technology to match your trade plan, not the other way around, right? So there's the trend forecast on the S&P 500. We can go look at the trend forecast on, what else is out there? The NQ, let's do the Qs, the power shares Qs, right? We can pull that up and take a look at what the Qs are saying. Here we go. Were the Qs saying bearish? I'm going to go to that same 3-day forecast that we were talking about, and holy cow, look at this forecast. This goes all the way back. This is 428. 428 was the beginning of this forecast, so about a month before the ES, and then the green line stayed above the entire time. And let me help you read this. Matter of fact, I'm going to scroll back on this chart a little bit. Let's say this is the position you're in. Hey, Monty, how's it going? Nice to see you, my friend. Nice to see you. Same thing, Monty. Monty's question is about using the triple cross, which is a longer term predicted moving average. It's an 18-day predicted moving average with 3 days of predictive information added to that 18-day. It looks like this. Same idea, Monty. It's going to be less sensitive, but it has 3 different zones. It's got bullishness, consolidation, and bearishness. We'll talk about that a little bit more here in a moment. But I just saw your question come through, right? All right, good. Bobby says 80% yes, but as we know, be very careful to use your stops intelligently against a 20% time is wrong. Bobby, I love it. Risk management, right? Minimize your downside risk before you try to maximize your upside potential, right? Which means because nothing is perfect, you got to have good money management in place, and I'll show you how to manage that utilizing predictive indicators capable of forecasting trends like this. So let's just follow this chart, and I'm keeping my eye right over here because let's say from a date standpoint, I'm going to try to give you a real-world scenario here. 7/21. I see the blue line is above the gray line still. I don't have to look at any other indicators yet until I see that blue line crossing below. And believe me, I have a host of predictive technical indicators. Predicted MACD, predicted RSI, predicted stochastic. I've got support and resistance. So many different indicators have been created using this powerful artificial intelligence. And I'll show you here momentarily how powerful it is and how it's generating those predictions. But let's do a real-world scenario. 7/21. We roll forward a day. The blue line is still above and the shaded area is still green. 7/24 because there was a weekend. We go forward one more day. 724, the blue line is above. Again, I can go forward another day. Now we're looking at it and seeing that on that day, 726, the blue line is still above. I'm confident. I've got a stop loss in place, let's say. I'm using a stop loss that, I mean, remember, the entry to this was way back here. So a stop loss according to your trade plan following up that trend is powerful, right? And we're looking at the Qs. We're looking at the Qs here, power shares Qs, you can see it. So a stop loss based off of that predicted low or whatever stop loss you're using here, roll forward another day. The blue line is still above. The market opened big that day, but then pulled back to a down day, right? And that date on the calendar, 7/27. Now the market opens and just runs up to a bullish day and the blue line is still above 7/28. So I'm just fast forwarding one day at a time to show you how to read this to see if you can use it. 7/31, end of the month, blue line is still above and pointed up, more bullishness in the trend. Another step forward, blue line is still above, it's flattened out a little bit, there's a little weakness happening. I still, again, I'm gonna carry my stop loss out, and I'm just using the stop loss of the last 72 hours, week or so. I'm gonna roll forward again, and now, boom, what do we have? Two scenarios happen. The blue line crossed below, right there, you can see it. But the candle also hit that stop loss limit. So in either case, the artificial intelligence said, okay, there's enough risk or there's enough weakness that this trend is expected to start going down, or your money management kicked in and said, oh, I got a stop loss trigger, and I'm making my decision at that point, especially seeing that the artificial intelligence is indicating a bearish trend, that I can exit a Q's position. Now, going from the beginning of this forecast to the end of this forecast, if I just go from here down to, we can go down to the close of that day, that's an 17.5% hypothetical gain here. 1,000 shares, let's kick this back to 100 shares, right? Just be conservative. Hypothetical gain of $5,597. And I just showed you how the artificial intelligence indicated that this trend is expected to change direction. Well, let's keep rolling forward. One more day. Boom. Market opened way lower than it closed the previous day. You can see that's 8.3. Had a little bit of bullishness in it, but still trend down. Next day, same situation. Trend down. See the red area? See the blue line below? Also, let me highlight something. When this blue line crossed below here, you can see the neural index was also red. This is another predictive indicator. And there's a sequence that we use these in, and I'm starting with the basic interpretation, but the blue line crossing below indicates the trend is expected to be lower. The first thing I do is look at the neural index, right? Remember what I was talking about before? I need to make sure that the weather is good, right? Let's call this wind, right? The trend. Let's call this, the neural index down here, let's call this waves, the seas. Are they rough seas, right? If there's going to be rough seas and there's going to be wind, I definitely don't want to take my boat out, right? Here are three predictive momentum indicators, right? This could be any one of those things. This could be rain. This could be lightning, right? This could be water temperature. Anything telling me, in this case, there is certainly bearishness. It's not a good idea for bullishness. Now, if there's any traders out there that like to buy puts, that like to short sell anything, this is a powerful indicator for you. Maybe you like to write covered calls. Options traders, take a look. When you see this happen, this is indicating of bearishness. Writing covered calls on this and taking advantage of that down market is another strategy that you can apply this technical analysis to, because this is very, very powerful technical analysis. So far, I think the answer to the question, and if I haven't answered it yet, go to the questions box and let me know, but can artificial intelligence forecast the stock market? I'm answering it with a resounding yes. And for those of you, there's several people in here that are part of the VantagePoint family. You've got the VantagePoint software. You probably answered that question long ago. But for those of you that haven't seen it or haven't answered that questions for yourself, the artificial intelligence in VantagePoint software, yes, it can forecast the markets. The artificial intelligence that you're reading about at all these other organizations and marketing places, and I can't tell you whether or not they can do it because they won't tell me how they're using AI. They don't have 3 decades of experience using AI. They don't have any patented technology or anything proven that it can, where the VantagePoint software does. All right? So let's keep on rolling forward on this. Blue line still below. So if I just keep on rolling forward, this is the update from last night, 8/7. The blue line is still below the black line, indicating that this trend is expected to be down. There is a gray candle out here saying we could have a lower than a closed day today, which we are getting. And there is bearishness on the Qs, and there is really no question about it. Heck, I can look at that and see that 80% accuracy is very, very, very powerful. If there's anybody out there that's not using the software and can see the benefits, and you've got questions you want to ask one-on-one, and you don't want to go to the chat, we just put a link in the chat for VantagePointForecast.com. Click on that, and we'll reach out to you and answer your questions one-on-one if this isn't something that you're using. Anybody can click on that, but it's there for you if you want it. Really quick, I want to answer the question of how, because I said that's something that we do in detail, and I'm just going to open up the market details. And the reason I'm opening up the market details is because I want to show you, this is the Qs, this is the how. This is a patented technology called intermarket analysis. VantagePoint looks at the Qs and then figures out which markets have the biggest impact on where the Qs goes. I don't mean correlation analysis, I mean intermarket analysis. That is the name of the patent that describes this. It is figured out that natural gas and the US dollar and oil and the US technology iShares ETF, it's figured out that Okta and SeaWorld Entertainment as a stock, I don't know why or how, but I can tell you, the AI has determined that all of the markets on this diagram, there's over 30 markets here, have some sort of influence on the PowerShare Q's price. And then it figures out whether it's going to push the PowerShare Qs up, sideways, or down, and by how much. Every single market is weighted by degree of impact. That is a patented process, and that's what's used to create the predictive information that creates the predictive indicators, all right? And this isn't new, right? It is absolutely revolutionary, but it was revolutionary when we released it for traders in 1991. We have an in-house research and development team that all they do is make sure this stays cutting edge so that you can continue to get those highly accurate forecasts. All right, I just wanted to show you that. I thought it was important for those of you that hadn't seen it before. Now let's dig in to some of the other markets to look at. Somebody had put gold into the chat box, so let me bring up gold. Here is GC, and you can see we can go to the most recent contract month on gold and open that up, the December contract month on gold. And what VantagePoint is saying about gold, if you look right now at this chart, you can see there are three distinct trends in gold, and this is the 2-day predicted moving average. We can see a very powerful downtrend. And then we can see across to the bullish side where the neural index agreed, it turned from red to green right there, and the three predicted momentum indicators are pointed up, saying bullishness in gold. And then we get a reversal to the downside, neural index red, predictive differences pointed down leading into that day. Again, a bearish reversal expectation. So Isma, you were asking about gold. What VantagePoint is saying about gold is that there's continued bearishness on the horizon. This is the 2-day predicted moving average. The neural index is also bearish. There is a little bit of momentum, bullish momentum going on the 1-day predicted momentum indicator. But all in all, the majority of our indicators, including the predicted low on gold, are saying that gold was expected to lose value today and be a lower price. So when we stop and we take a look at this forecast came out here, and from that forecast date all the way until here, the close, I don't know where it is today, I can look and see, 1959. So gold is down here, right at the predicted low. VantagePoint predicted a low of 1958. Look, if I put my cursor right here, you can see I get a predicted high and predicted low. Isma, this is for you. VantagePoint predicted a low of 1958.80. 1958.80 would say that from a gold standpoint, there is still an opportunity to lose even more. And I don't know how many contracts you usually trade of gold, but if I kick this back to just one contract of gold in 9 trading days, that is a bearish move of about 2% and a hypothetical gain of $4,000 per contract, just simply short selling gold. All right, simply short selling gold. So I think that's key. I think that's something that everybody should understand, is that if you're using this information, and I have other indicators I like to put on this, like support and resistance. I can see what VantagePoint is doing in this case is it is giving me a view of where the support levels and the resistance levels are related to gold. Here's a resistance level. Here is the last support level that was broken. 2 candle closes to confirm a support breakout, and prices kept on falling. So everything is supporting, I should say everything. 85% of the predictive indicators I'm looking at right here in the software are indicating bearishness. No question, Isma, take a look at that and tell me if you can see that based on this forecast, was gold expected to be bearish or not. Let me just check the chat box really quick and see. Hey, Fernando, I see you got some questions you want to dig into. Monty says, to verify the accuracy of VantagePoint, I have backtested over 30 stocks over a period of 6 months, and my experience was an accuracy rate of in excess of 87%. Thank you, Monty. Monty is a VantagePoint user today. Thank you for putting in that comment, my friend, because I guess it's one thing for me to say it, right? I'm the one on the channel, but to hear you say that and you talk about your experience using the software over a 6-month period in your personal trading, that's powerful. And I appreciate that feedback. You know, we have so many VantagePoint family members, and that's what we call our VantagePoint users, or VantagePoint family members that have found such great success. And you know, those aren't my words. Monty's sharing his own words. So thank you for that. And I haven't verified those, but I I like what you had to say there. All right, let's take a look. There was something else, light sweet crude oil. And by the way, if you want to just go over to the chat box and pop in some tickers, go to the chat box, do that. Happy to take a look. Maybe there's a stock you want to look at. Maybe there's a futures market you want to take a look at. Here's the light sweet crude oil latest forecast. This is pretty powerful. You know, a lot of traders that trade the futures markets and light sweet crude like the short-term forecast. This is the 1-day predicted moving average. Remember what I was saying, when the markets are more erratic, the 1 day is the one that 1 and 2 days are going to be first out of my toolbox, to use a lack of a better term. And then as things smooth out, I can switch to a 2 or a 3 day. And that's using the predictive indicators for your trade style and the market conditions. And you can see some very quick moves using the 1 day. One, bullish trend, bearish, bullish, very quick moves. Bullish, a little whipsaw here, which is going to happen. Nothing's perfect. And then a nice bullish trend. So a lot of really great moves on light sweet crude oil. And based on what VantagePoint is saying from a crude oil standpoint, is that there is certainly some consolidation happening. Even when I look at the 2 day, I can see that there is a little flattening of that line. VantagePoint is indicating a low potential of light sweet crude oil of 81.23. Crude oil is at 81.83 right now, so it's right about in the middle of that candle, close to where it closed yesterday. And VantagePoint was indicating that this bullish trend is not over. There's just some short-term weaknesses. And look, I can see that weakness in the predicted momentum indicators. That's a consolidating momentum indicator. That is a bearish momentum indicator. That is a consolidating momentum indicator. You can see that where there is some momentum that is pulling off of that and slowing down that bullishness. Not enough to reverse the trend just yet based on the VantagePoint forecasts, but enough to create a little bit of a weakness in that bullish trend. And that's really using the power of the artificial intelligence. Hey, Pat, let's take a look at LNG. Now, when you say LNG, I assume you're talking about Cheniere Energy. That's a stock, not liquid natural gas. But if it is liquid natural gas, let me know that as well, and we can take a look at natural gas, which is usually from a ETF or a futures standpoint. Here's Cheniere Energy. Here's a really great move that was forecasted on 6/2. Looking at the VantagePoint forecast, there has really been a substantial bullish trend going on here. And let's take a look. 13%. That is very nice. Very nice bullish forecast that turned out very well. What is VantagePoint saying about this right now? VantagePoint is saying that there is consolidation happening on Cheniere. It's saying that there's a bullish trend expected, but you can see that predicted moving average is very close to that simple moving average. And if you joined late, go check out the beginning of this session on replay. It'll be right there in the live on our YouTube channel. Go check out the replay. And what I talked about was the simple moving average compared to the predicted moving average. And this is saying that there is some bullishness expected in this trend. It even has a gray bar with a predicted high potentially higher. But all in all, their bullish trend is still expected to continue. There is some weakness in that bullish trend. You can see momentum has shifted a little bit to consolidating and bearish momentum, but all in all, the trend was not expected and is not expected to change direction at any point today. More so, just have some weakness in that trend. Now you have to decide, based on money management rules, whether or not this is tagged your stop loss. And let me give everybody here a great way to use the predictive information on a stop loss. Here's the predicted low. The predicted low on LNG, the stock, is 161.09, 161.17. Well, that's as low as VantagePoint is indicating that this stock is expected to go today. If you use that to set a stop loss, let's say at 160, and if that stock drops below 160, well, then at that point, you've got a decision to make about your risk tolerance rules. Is that enough of a move to take you out of this position and lock in those substantial gains because they were substantial? Or is that enough to say, or is that not enough to say, you know what, after earnings, it pulled a low way down here. I'm okay having a stop loss at 155 because my entry was somewhere around 145. That's up to your trading style, and you can utilize the predictive information to really gain an edge when it comes to that. All right, Pat verified for me it's natural gas, so we're going to pull up natural gas here. I'm going to go get the most recent contract month for you, my friend. There we go. Here's the natural gas forecast, and again, you can look at this and see that the indicator, because there's not a lot of trending going on, and what I mean here, guys, my first look, here is the channel natural gas has been in, from 238 to 278, so about a 40-cent channel, which means I should think about looking at the short-term crossover, the one-day prediction, or the two-day prediction based on my trade style. Knowing Pat, I know the one-day prediction because Pat has been involved in several of our conversations. He's a VantagePoint family member. He utilizes technology, and from a trade style, futures is where it's at for him. So I know that one-day forecast is key for his analysis. And when I look at this, I can see we had a fresh crossover on 8-4. That was Friday. Bullishness expected on liquid natural gas, NG, and this is, you can see from a contract month standpoint, this is the September contract, 2023. In one day after that forecast, so on Friday, there was bullishness forecasted on 8-4. Pat, in one day there was a great bullishness expected there. And you can see by looking at this that the forecast, I think everybody can see that the forecast generated a substantial move to the upside. A substantial bullish move in natural gas that produced 5%. One contract, hypothetically, could have done $1,400 in one trade day to the end of the day. Now, what VantagePoint is saying about this is that there's still more bullishness expected. So today is expected to have a little bit of bullishness in it as well, because the momentum is there, because the predictions are there, and there's certainly bullishness from a predictive indicator standpoint. So no matter how I slice this is Pat, I'm seeing bullishness in natural gas. I think you probably get it. Hopefully you took advantage of this forecast. I know that one-day prediction is something you like to take a look at. And anybody trading futures, Forex, heck, Bitcoin, let me show you Bitcoin. Can VantagePoint forecast Bitcoin? Yes, it can. And you can see there was a fresh crossover. I'm going to zoom in on Bitcoin and show you there's a fresh crossover that happened right there on Bitcoin 2 days ago, indicating some bullishness with a predicted high up here. The neural index is green. The predictive differences are pointing up. And VantagePoint is forecasting some clear bullishness on Bitcoin using the indicators that I've covered so far. In addition to that, there was very powerful support down here on Bitcoin. If I put my support and resistance zones on, you can see support, tested, failed, tested again, failed, and bullishness expected. So no matter how you slice it, using support and resistance with the predictive indicators, with what the neural networks are doing to do that deep machine learning and generate this artificial intelligence, no concerns. Bitcoin was expected to be bullish based on this, and we were looking for Bitcoin to gain some today, even potentially getting up to 29,470 or higher. So you got to ask yourself, the VantagePoint forecast said Bitcoin could go up to 29,478. If Bitcoin is at or above 29.478, that is a substantial move that could have produced very well for anybody just from that crossover point to today. And you can see that. Very nice move on Bitcoin. Let me just check the chat here and see if there's something else you guys want to take a look at. OAS, Walmart, OAS, thank you. I don't know if that's a talker, the ticker symbol, Fernando, but OAS is not something that is available in the VantagePoint forecast. And let me explain that for everybody. You can see on the left-hand side of the screen, in the stocks, there are 16 individual stock sectors. There's about 1,200 individual stocks on the initial packaging that can be forecasted using the artificial intelligence. I shouldn't say can be forecasted. Let me clarify what I mean. There's over 1,200 individual stocks that are forecasted with a high degree of accuracy. Every stock out there can be forecasted, but not every forecast has a high accuracy rating. Remember, you can get a coin flip. Flip a coin, catch it, 50-50, right? Anybody can do that on any stock you want. We're not interested in those odds. We want an edge. Standard technical indicators can give you an edge to maybe, I don't know, a couple percentage points more. VantagePoint, our minimum accuracy in forecasting for any one of those 1,200, when you take a step back and you think about that, is 70%. Forecast has to be at least 70% accurate, which is why OAS is not in there. There's a bunch of reasons why something may not be in there, but that's what determines whether or not you can get the forecast in the VantagePoint software. Remember, we're talking about getting an edge that can be helpful. We're not talking about just looking at individual stocks. Here's Walmart for Island Trader. Walmart has some bullishness expected. If I'm looking at that blue line is forecasting bullishness. The neural index is green. The predicted high and predicted low are higher. Doesn't mean every day is going to be an update, but this is clearly saying, excuse me, there is more bullishness in this trend. The one thing that I want to take a look at is whether or not this is a 52-week high. The 52-week high analysis can help me understand, and it is. I have an indicator right here that identifies the 52-week high and the 52-week low with a green line. I put it on the chart, and it's telling me that yesterday's high is the 52-week high, which means if I break that, I'm going to need more volume and momentum to keep and stay past that. What traditionally happens is you get a break of that and then a pull back, because that 52-week high is something a lot of traders are looking at and wondering if it can go higher, which means there's a lot of sellers sitting up here waiting to push this down. Pardon me. There's always buyers and sellers in the financial markets, and there are points where buyers are waiting and sellers are waiting. In this case, a 52-week high is a point where sellers are waiting. The AI is indicating more bullishness, but there's going to need to be some more momentum and volume. I'm going to put volume on my chart here to push it up. We're getting more bullish volume than we had yesterday, bearish volume. So there's definitely some volume there. That means I would be expecting this to break that 52-week high and take a couple of days to stay above it. It's going to need to retest that high a couple of times based on support and resistance. But the artificial intelligence is indicating more bullishness than bearishness, Island Trader. Let's see, CVS. Hey, Bobby, I just see your note. I've been a family member now, VP for over 3 years. I use it every day to assist me in my trading. Love it, Bobby. I love it. Thank you for being here, too. I love the fact that we have new traders that haven't seen VantagePoint before, traders that use it on a consistent basis, subscribing and participating in our lives. All right, here's Roku, and Roku after earnings had a big move to the upside. You can see that, and then it pulled back off of that again. I started to question that 52-week high. Yep, my assumption was correct. There's a 52-week high up here. I'm going to put on my support and resistance, and just so that I can take a good view of what's expected to happen. Right now, prices on Roku are right in between that resistance level and that support level. The blue line is pointed down, saying that this bullish trend is losing a lot of steam. The predicted low is saying things could be as low as 85.82. Well, look at the momentum. The predicted momentum pretty much reversed and started screaming down right after earnings happened. That happens quite a bit. This is a point where buyers and sellers are going to fight. Sellers are sitting up here waiting. There's got to be enough buyers in order for that price to continue higher. After earnings, a lot of those buyers turned into sellers, and that pulls prices down. VantagePoint is saying there's a lot of consolidation, a lot of bearish momentum going on. Still a little bit of bullishness in the trend on the 2-day. But again, if I flip to the 1-day based on how erratic the market has been, there's already a bearish forecast on that 1-day forecast going to last week. So on the short term, VantagePoint is indicating 1-day weakness, 1, 2, and 3-day bearish momentum. But overall trend on the longer term forecast is saying there might be just some consolidation happening. So depending on your trade style, again, if you like to short the market and you like to be on top of these moves, very sensitive to these moves, that 1-day forecast is really where it's at on the trend forecast. So, yep, that's right. That's right. Bobby says he was at the VP Summit. Glad you were there. We do bring our VantagePoint family members to Tampa a few times a year to do some immersive in-person training. It's an exclusive event that not everybody can take advantage of, but VantagePoint family members can, and Bobby was there. So, all right, Boeing. Here's the forecast on Boeing. VantagePoint was indicating, was it Boeing you were asking for, or was it Bank of America? Let me look. Boeing. Okay, so VantagePoint forecast on Boeing. Again, we're on the medium-term crossover. Here's the post-earnings, and this is, if I look at Roku, right? You see what's happening with Roku, and I look at Boeing, you're getting the same effect. Post-earnings run up, probably a 52-week high. 52-week high. That means the buyers turned to sellers and started taking their profits. But VantagePoint blue line on the 2-day crossover never changed direction. It consolidated. And this is what I was saying a second ago. On the 2-day, we're seeing consolidation, but not a trend change. If you're a more sensitive trader, the 1-day would have had a crossover going bearish and then a fresh crossover yesterday going back bullish again. That's what's important about using your trade style to analyze these forecasts. And in this case, Boeing is now bullish again. The VantagePoint predictive indicators stayed bullish on the 2-day. The 1-day crossed bullishly the 3-day. I can go to the long term and see that the 3-day never even got close to crossing bearishly. So everything was bullish from that standpoint on the 3-day. The predicted high is expected to be higher. The predicted low is expected to be higher. There is short-term strength in price. Now we had our momentum roll over and then bloop, look at the tails. Consolidate, and then bullish. So we're seeing our momentum, predicted momentum saying, oh, wait a second, momentum over the next 1, 2, and 3 days is shifting from bearish momentum to bullish momentum, which has a high likelihood of pushing prices higher for Boeing. And what that says is that VantagePoint is expecting Boeing to be higher today and the trend to continue higher through this week. So hopefully that's, let me see who was asking for Boeing. Scott, hopefully that's something that you were looking at and you know, really finding some good value in. Let's see, Riot, thank you, Steve. Steve popped in a whole bunch of them in there. Riot, Coin, Mara, Hut. Here's Riot Blockchain, bearish trend to the downside. You know, one of the things to consider with this, a lot of traders will look at Bitcoin and then look at a blockchain and say, well, Bitcoin's going to be up, blockchain may be up as well. That's not what VantagePoint is saying. VantagePoint is saying that Riot is expected to be down. That forecast was bearish a few days ago, and things are still expected to be lower. Heck, even the predicted low on VantagePoint is saying a predicted low of potentially 1532 with a 1535 with a predicted high of 1715. So that is where we would be expecting Riot to play or trade today, right between, let me get my arrow back, right between that gray candle. What you would see by looking at that is probably Riot right within that gray candle. Where is Riot? Let me see. Let me pull it up. Maybe I've got it over here. 1678. 1678. There you go. Oh, too far. Right about there is where Riot is right now. And it is, a down day because it opened higher than that today. Thank you for that, Steve. And what was the other one? I don't know that I'll have a chance to get to all of these, but I'm looking. Mara. There we go. bearishness. Now we got earnings coming out. Earnings expected on Mar. This is an additional indicator that's available after the market close. Today we've got an earnings forecast on this. There is some bearishness expected from an earnings standpoint. You know, this is, by the way, in case you're wondering, earnings is an individual decision. Not every trader is going to trade through earnings. Some traders are going to take advantage of the IV rush leading up to earnings, and then they're going to book it right before earnings is announced. Some traders are going to let earnings come out, wait 72 hours, and then look at the forecast to decide what's expected to happen. And some traders are going to, do straddles and strangles, if you like, options, and play right around earnings, expecting to take advantage of some of those short pops. Again, that's your personal trading style, but VantagePoint is clearly indicating some bearishness around earnings, Steve. Let's see. Very new to trading options, says Elijah, but I really want to be consistent. How many people in this chat have bought VP? I'm interested in day trades or shoe trades only. So you're thinking about swing trading. Thank you, Elijah. I couldn't tell you how many people in this chat or short trades only. I couldn't tell you how many people are in this chat that utilize the software. We've got several hundred people, but I would suggest you go to VantagePointForecast.com and we can talk with you one-on-one. This is designed for swing trading. All the analysis I'm looking at are from day trades to swing trades, anything that runs from a day, 2 days, 3 days, heck, a couple of weeks. That's what this is designed for, not scalping the market. Long-term investors that write covered calls love using this technology because they can sell some calls on something they're staying invested in. So let's look. Let's see what else. I got a couple of other tickers in here. Thank you, Monty. I know you got to run. Oh, it's 12:31. Let me pop these two tickers in and do some analysis here for Bobby Asana and ABEV. Okay, I think we looked at that one. This not even one that I'm going to take a look at. And the reason I say that is because it has gone into no man's land. It's been in a channel for 3 weeks. And what I'm saying is this channel right here, you can see it trended into this channel and it's just been bouncing around in here. The advantage to using VantagePoint is you can go to that 1 day forecast and look for those quick 1, 2, 3 day pops. Look, there's about 10 days, there's about 5, 6 days, there's about 4 days, 3 days, 2 days. Very, very quick trades on Asana using that 1 day forecast. Very powerful as well, because I think it was Elijah was asking about these very quick trades. Couple of days at a time, and you can see exactly what those predictive indicators are capable of. And there is some consolidation, by the way, going on Asana. Even on the 1 day forecast, you can see bearishness because we got a bright red shaded area here, but there's some consolidation happen. Short-term momentum, medium-term momentum, some consolidation, even some bullishness. So we are still expecting bearishness in this trend, maybe even potentially lower than the predicted low of 2162. But again, this forecast was bearish from about 23. So that's a dollar or so very quickly in a couple of days. AbbVie, big bullish trend going on this. Is it expected to continue? Well, let's look. Let's zoom in on it. Here you go. Everybody that's been in this session, and this will be the last one I do because I know we're about an hour and I try to run about an hour, but you can see the blue line is above on AbbVie. That's ticker symbol ABBV. Blue line is above. You can see that. Expecting more bullishness in the trend. It has a predicted low of 149.35. That means this could go down to 149.35 today and not have any concerns that the AI is predicting that. This AI predicted it at 6:30 p.m. Eastern time last night. If anybody's wondering where I'm getting that AI generated predicted low, look right over here. You see where it says predicted high, predicted low, predicted trading range, $2.28. 149.35. There is some consolidation happening in momentum, but there's still some strength in the trend. I can add my support and resistance indicators on here to get a good view. There is support up here. It's trying to retest that support. Let me get some of these scribbles off. Price is trying to come back up and retest that support. If it comes up and tests that support, it could pull back down because there are sellers sitting up here waiting to capitalize on that. So I would expect it to get up to that high and then pull back down to the low today based on what the artificial intelligence is saying here. And again, 149.35, where is it? I don't know if you... It is at 149.36, 149.38. It is literally right at what VantagePoint forecasted as a predicted low. And it even went up to 151.75. VantagePoint said 151.62. So it literally did exactly as was predicted. Went up, grabbed that high, hit that support, retested it, pulled back to that predicted low. Overall trend still expected to be bullish. And I'm going to end on that note. I think this is a very valuable session. I don't know, you guys tell me in the chat, did we answer the question, can artificial intelligence forecast the stock market? I think we answered that question. The VantagePoint artificial intelligence can forecast the stock market with incredible accuracy. And, you know, I've had it, been utilizing it for a long time. I dig into it every single day. So I know how powerful it is, and our users that are in this session have said the same thing. If you're interested or you got questions, just check out VantagePointForecast.com. And if you haven't already subscribed to our VantagePoint AI YouTube channel, subscribe. We do this every couple of the weeks. So thank you for your time today, and thank you for letting me give you the view from my vantage point. Have a great day, everybody.